You're staring at your screen right now, and your palms are sweating. The position you opened 30 minutes ago is down $400. Your heart is hammering against your ribs like it's trying to escape. There's a voice in your head screaming at you to close it, to just get out, to stop the bleeding. But there's another voice too, a quieter one. It's whispering that maybe, just maybe, it'll turn around, that you can't take the loss, that you're better than this. And so you sit there, frozen, watching the red numbers climb higher, your entire body locked in a battle between fear and hope, while your 6 million-year-old brain does exactly what it was designed to do. It keeps you alive, but it's also destroying your trading account. Here's the thing nobody tells you when you first start trading. The reason you keep losing isn't because you don't know enough about support and resistance. It's not because you haven't found the right indicator combination. It's not even because the market is rigged against you. You're losing because your brain, this incredible 3-pound universe sitting in your skull, is running software that was written 6 million years ago. And that software has one job: keep you breathing, keep you away from danger. Make sure you live to see tomorrow. In the African savanna where your ancestors evolved, this was genius. If you heard a rustle in the grass, your brain didn't sit there analyzing probabilities. It didn't wait for confirmation. It flooded your system with adrenaline and got you moving. The ones who stopped to think became lunch. The ones who ran survived. And their DNA, their nervous system, their instant fight or flight response, that's what you inherited. That's what's sitting inside you right now, trying to trade the S&P 500. But here's the cruel irony. The same instincts that kept your ancestors alive for 6 million years are the exact instincts that make you a terrible trader. Because the market doesn't reward the person who runs from danger. It doesn't pay the person who needs to feel safe. The market pays the person who can sit in discomfort. The person who can watch their account swing $500 in either direction and feel absolutely nothing. The person who has somehow rewired their ancient survival brain to stop treating volatility like a predator. And that's not natural. That's not normal. That goes against every single message your nervous system is screaming at you. Think about what happens in your body when you take a loss. Your stomach drops. Your breathing gets shallow. Your vision narrows. You feel this wave of heat spreading across your chest. That's not just emotion. That's your sympathetic nervous system activating. The same system that fires up when you're in actual physical danger. Your brain is releasing cortisol, adrenaline, all the chemicals designed to help you escape a threat. And what does your brain think the threat is? It's not the money. Not really. It's the feeling of being wrong, of being exposed, of standing in the middle of the savannah with nowhere to hide while the market, this massive, unpredictable force, proves that you don't have control. That you never did. And for a brain designed to seek certainty, to create patterns, to predict and prepare for danger, that feeling is unbearable. So what do? You close the position. You take the loss just to make the feeling stop. Or worse, you hold it, hoping it'll reverse. Because taking the loss means admitting you were wrong, and your 6 million-year-old brain will do anything to avoid that admission. It will gamble your entire account just to avoid the psychological pain of being incorrect. And this is where most traders live. In this exhausting cycle of impulsive entries and panic exits, revenge trades and overtrading, all driven by a nervous system that thinks every red candle is a saber-toothed tiger. You're not trading the market. You're trading your own fear. And fear always loses. Let me take you inside a specific moment, because this is where it gets real. You've just closed a position for a small profit. $50. It felt good for about 30 seconds. Then you watch the chart, and it keeps going in the direction you just exited. Now it's up 150. Then 300. Then 500. And something starts burning in your chest. It's not quite anger. It's not quite fear. It's this gnawing, acidic feeling that you left money on the table. That you missed out. That while you were being cautious, someone else was getting rich off the move you saw first. Your brain starts running a narrative. If you had just held on. If you had trusted yourself. If you weren't so weak. And before you know it, you're scanning the chart for another entry. You're looking for any reason to get back in. Not because the setup is there. Not because your system says enter. But because your 6 million-year-old brain can't tolerate the idea that reward is happening without you. This is FOMO. Fear of missing out. And it's not some modern social media disease. It's an ancient survival mechanism. 6 million years ago, if your tribe found food and you weren't there, you might starve. If they discovered shelter and you were off wandering alone, you might freeze. Your brain learned that being left out equals death, that missing the opportunity equals danger. And so it developed this intense anxiety around scarcity, around not being part of the action. Fast forward to today, and that same mechanism fires up every time you see a stock ripping higher without you. Every time someone posts their gains on social media. Every time you close a winner early and watch it run. Your brain doesn't see a chart. It sees the tribe moving on without you, and it panics. It demands that you do something, anything, to get back in the game, even if the rational part of you knows the entry is terrible. Even if every rule you've set says wait. The emotional brain is louder. The 6 million-year-old brain always wins. And here's where it gets even more insidious. Once you enter that FOMO trade, once you chase the move, your brain doesn't just calm down. It doubles down. Because now you're in a new position, probably at a worse price, and the market starts moving against you. And what does your brain do? It starts searching for evidence that you're right. It starts filtering out information that conflicts with your position and amplifying anything that supports it. This is called confirmation bias, and it's not a weakness. It's a feature. 6 million years ago, once you committed to a path, once you decided that cave over there was safe, your brain needed to believe it. Doubt was dangerous. Hesitation could get you killed, so your ancestors evolved to become certain, to find reasons to trust their choices, even when the evidence was thin. And you, sitting here in front of a trading screen, you inherited that same mechanism. You entered a bad trade, and now your brain is working overtime to convince you it's actually good. It's finding bullish patterns where there are none. It's remembering news that supports your thesis and forgetting everything else. Not because you're stupid, but because your 6 million-year-old brain is trying to protect you from the psychological pain of admitting you made a mistake. Let's talk about revenge trading for a moment. Because this is where the brain's survival wiring becomes almost violent. You take a loss. A real one. Not $50. Maybe $500. Maybe $1,000. And something primitive wakes up inside you. Your brain doesn't process this as a statistical outcome. It processes it as an attack. As theft. As someone taking resources that belong to you. 6 million years ago, if another tribe stole your food, you didn't sit there journaling about your feelings. You fought back. You reclaimed what was yours. Aggression in response to loss was survival. And that same circuitry, that same hot rage that floods your system when you lose money, it's your brain trying to fight back. Trying to reclaim what was taken. Except there's no enemy. There's just the market, this neutral force that doesn't even know you exist. But your brain can't accept that. It needs a villain. It needs a fight. And so it pushes you to open another trade immediately. Not a planned trade, not a setup, just pure emotional retaliation. And you do it. You open a position twice the size, determined to win back what you lost. And when that one fails too, the cycle escalates. Bigger size, more aggression, less thinking. Until your account is in ruins, and you're sitting there wondering what just happened. What just happened is that your 6 million-year-old brain hijacked your prefrontal cortex. The prefrontal cortex is the part of your brain responsible for planning, for logic, for long-term thinking. It's the CEO of your mind. But it's also the newest part. It's only been around for a couple 100,000 years, and it runs on a lot of energy. It's slow. It's deliberate. It needs glucose and rest and calm conditions to function. Meanwhile, your amygdala, your limbic system, the ancient emotional core of your brain, that's been running the show for 6 million years. It's fast. It's automatic. It doesn't need permission. And when you're stressed, when you're in pain, when you just lost money, the prefrontal cortex goes offline. The CEO leaves the building. and the 6 million-year-old survival brain takes over. And it doesn't care about your trading plan. It doesn't care about risk management. It cares about making the pain stop. It cares about fighting back. And it will burn your account to the ground trying to do it. Here's another scenario you know too well. You've been watching a stock for days. You've done your research. You have a clear entry point, a clear stop loss, a clear plan, and then the moment comes. The setup is there, it's perfect. Your system says go, but you don't. You sit there hand hovering over the mouse and you hesitate. Maybe you're thinking about the last trade that looked just like this and stopped you out. Maybe you're thinking about all the ways this could go wrong. Maybe you're just feeling the weight of the decision, the responsibility of putting real money at risk. And you freeze. You watch the entry pass. You watch the stock move exactly as you predicted, ripping higher without you. And then, only after it's run 100 points, after it's clearly overextended, that's when you enter. Right at the top. Right before it reverses and stops you out. And you sit there, staring at the screen, wondering why you always do this. Why you always wait until the moment is gone before you find the courage to act. This is the paralysis response. It's the third option in your brain's survival toolkit, and it's just as ancient as fight and flight. 6 million years ago, when a predator was close, sometimes running made you a target, sometimes fighting was suicide. So your ancestors froze. They became invisible. They waited, perfectly still, for the danger to pass. And that freezing response, that analysis paralysis, that's what's happening when you can't pull the trigger on a good setup. Your brain is treating the trade like a predator. It's seeing risk, uncertainty, the potential for pain, and it's locking you down. It's keeping you safe by keeping you still. Except in trading, stillness isn't safety. Stillness is opportunity cost. It's watching edge slip away while your 6-million-year-old brain congratulates itself for keeping you alive. And then there's overtrading. You've had a good day. You made $300 on 2 solid trades. You're up. You're feeling confident. You should stop. You know you should stop. But you don't. You keep scanning the charts. You keep looking for setups. And you find one. Not a great one. Not even a good one. But your brain is lit up. You're in flow. You're winning. And 6 million years of evolution is telling you that when resources are abundant, you take more. You don't stop gathering food just because you already have some. You gather as much as you can while the gathering is good, because scarcity is always around the corner. Famine is always coming. And so you overtrade. You keep pushing. You take the marginal setup. Then another. Then another. Until you've given back all your profits and then some. And you're left sitting there, exhausted, wondering why you couldn't just walk away when you were ahead. This is the scarcity mindset wired into your DNA. Your brain doesn't believe that tomorrow will have opportunities. It doesn't trust that there will always be another trade. It operates from a place of lack, of needing to maximize every moment of abundance, because the drought is inevitable. And in a world where food actually was scarce, where winter could kill you, this made sense. But in the market, where opportunities are infinite, where there's literally another setup tomorrow and the day after that, and the day after that, this mindset is poison. It keeps you glued to the screen. It keeps you forcing trades. It keeps you burning energy and capital on low-quality setups just because your 6-million-year-old brain can't accept that it's okay to stop. That it's okay to leave money on the table. That rest isn't weakness. So here's the real question. If your brain is wired against you, if 6 million years of evolution is actively sabotaging your trading, what do you do? How do you win a fight against your own neurology? The answer isn't to fight it. You can't. Your survival brain is stronger than you. It's faster than you. It will always be there, humming in the background, ready to take over the moment things get stressful. The answer is to design a system that doesn't give it the chance. A system that removes the decision-making from the moment of emotion. A system that runs on rules, on structure, on pre-commitment, so that when your amygdala fires up, when your fight or flight response kicks in, you don't have to think. You just execute. Let me introduce you to what I call the survival override protocol. This is not a strategy. This is not a set of indicators or a magic entry pattern. This is a framework for protecting yourself from your own brain. And it starts with one simple truth. Every single decision you make while in an active trade is contaminated. Every thought you have while you're in profit or loss, while your money is at risk, while the candles are moving, that's not you thinking. That's your 6 million-year-old brain reacting. And you cannot trust it. So the first rule of the protocol is this. You make all your decisions before the trade. Not during, not after. Before. You decide your entry, your stop, your target, and you write them down, not in your head. On paper. On a spreadsheet. Somewhere external. Because your brain will lie to you in the moment. It will rewrite history. It will convince you that your stop was always a little lower. That your target was always a little higher. External documentation is the only truth. The second rule is the 3 gates of action. Before you enter any trade, before you click that button, you pause. And you ask yourself 3 questions. First question. Is this trade part of my plan? Not is it a good trade? Not does it feel right? Is it in your plan? If the answer is no, you don't take it. No exceptions. No rationalizing. Your plan exists to protect you from your emotional brain. Respect it. Second question. Can I afford to lose this trade? Not financially. Psychologically. If this trade hits your stop, if you lose whatever you're risking, will you be able to walk away calmly? Will you be able to take the next trade with a clear head? Or will you spiral into revenge trading? If you can't afford the psychological loss, you don't take the trade. You reduce your size or you wait. Third question. Have I waited 10 minutes? This is the gap. The 3-second gap that every mindfulness teacher talks about, stretched into 10 minutes. You see the setup. You want to enter. But you don't. Not yet. You set a timer for 10 minutes. You walk away from the screen. You breathe. You let the initial surge of emotion pass. And when you come back, if the setup is still there, if it still makes sense, then you take it. But here's what you'll find. Half the time, by the time you come back, the setup is gone. Or your mind is clearer, and you realize it wasn't that great to begin with. That 10-minute gap is a filter. It catches the impulsive trades, the emotional trades, the ones driven by your 6-million-year-old brain. And it lets them pass without damage. The third rule is the profit and loss blackout. Once you're in a trade, you don't look at your profit and loss. You look at the chart. You look at price action. You monitor your levels. But that little number at the bottom of your screen, the one that shows you how much you're up or down, you cover it. You literally put a piece of tape over it, or you hide that column in your trading platform. Because that number is not information. It's emotional fuel. When you see that you're up $300, your brain starts calculating. It starts imagining what you could do with that money. It starts feeling the pleasure of winning, and it wants more. It wants to move your target. It wants to let the trade run. Not because the chart says so, but because your brain is chasing the dopamine hit. And on the flip side, when you see that you're down $200, your brain panics. It starts catastrophizing. It starts imagining total ruin. And it wants out. It wants to stop the bleeding, even if your stop hasn't been hit, even if the trade is still valid. The profit and loss number hijacks your rational decision-making. So you remove it. You trade the chart. You follow your plan. And you only check your P&L after the trade is closed. The fourth rule is the flatline debrief. After every single trade, win or lose, you sit down and you write 3 observations. Not feelings. Observations. Facts. What did you see in the market? What happened with your exit? Did you follow your plan? Did you deviate? Why? You write this immediately. You start to see that you always hesitate on morning setups. Or that you always overtrade after wins. Or that you always move your stop when a trade goes against you. These patterns are invisible in the moment. Your 6-million-year-old brain hides them from you because they're uncomfortable. But when you document, when you create external data, the patterns show up. And once you see them, You can start to design rules around them. You can build guardrails that prevent your survival brain from sabotaging you. And here's the final piece, the one that ties it all together. You have to understand that your 6 million-year-old brain isn't the enemy. It's just doing its job. It kept your ancestors alive through ice ages and droughts and predators. It gave you the ability to feel fear when danger is real, to feel excitement when opportunity appears, to connect with others, to learn, to adapt. Your survival brain is a miracle. It's just not designed for trading. And when you fight it, when you try to suppress your emotions or pretend you're some cold rational machine, you lose. Because you can't win a fight against 6 million years of evolution. But you can work with it. You can acknowledge it. You can say, I see you. I know you're scared. I know you want to protect me. Thank you. But I've got this. I have a plan. I have rules. I don't need you to react right now. And that small act of recognition, that acknowledgement of the fear or the greed or the FOMO, it creates space. It gives your prefrontal cortex a chance to come back online. It lets the CEO return to the office. There's a concept in neuroscience called metacognition. It's your ability to think about your thinking, to observe your own mental processes. And this is the skill that separates profitable traders from everyone else. It's not intelligence. It's not education. It's not some innate talent. It's the ability to notice when your 6 million-year-old brain is taking over, to catch the moment when fear is making the decision instead of logic, to see the FOMO rising, the revenge trade forming, the overtrading pattern starting, and to pause, to breathe, to remind yourself that you have a system, that you have rules, that you don't need to react. This is the work. This is the real trading psychology, not positive affirmations or visualization or any of that surface level stuff, but the deep. It doesn't feel like some massive breakthrough. It feels quiet. You'll be sitting at your screen, watching a trade move against you, and you'll notice that your heart rate is normal. Your breathing is steady. There's no panic, no urge to close early. You're just watching the price action, following your plan, waiting for your stop or your target. And it'll feel almost boring. That's the goal. Boring. Because exciting trading is emotional trading. And emotional trading is your 6 million-year-old brain running the show. When trading feels boring, when you can sit through volatility without your stomach churning, when you can take a loss and feel nothing, that's when you know you're finally trading with your prefrontal cortex. That's when you know you've built a system strong enough to override 6 million years of survival wiring. But here's the truth I need you to hear. This isn't a one-time fix. This isn't something you learn once and it's done. Your survival brain will always be there. It will always try to protect you. There will always be days when the fear is overwhelming, when the FOMO is impossible to resist, when you break your rules and overtrade and revenge trade and spiral. And that's okay. This isn't about perfection. This is about awareness, about catching yourself faster each time, about having the tools to reset, to come back to your system, to stop the damage before it gets catastrophic. The traders who make it aren't the ones who never feel fear. They're the ones who feel the fear, recognize it for what it is, and trade anyway. They're the ones who understand that their 6 million-year-old brain is just trying to help, but they've trained themselves to gently ignore it. So here's your homework. For the next 7 days, I want you to keep a simple log. Every time you feel a strong emotion while trading or watching the market, write it down. Just one word: fear, greed, FOMO, anger, relief, whatever it is. And next to that word, write what you wanted to do in that moment. Enter a trade, close a trade, move your stop. Then write what you actually did. You don't need to analyze it. You don't need to judge yourself. Just document. Because awareness is the first step. You can't change what you can't see. And most traders are completely blind to the patterns their emotional brain is running. This simple practice, this act of noticing, it starts to create that gap, that space between stimulus and response. And in that space, that's where your edge lies. One more thing. If you found yourself nodding along to any of this, if you recognized yourself in these patterns, drop a comment below with just the words, TURKL Modi. That's it. No explanation needed. It's a commitment to yourself, to slow down, to stop reacting, to trade like a turtle instead of a rabbit. Slow, deliberate, patient. Because in this game, the tortoise doesn't just beat the hare. The tortoise is the only one who survives. Your 6-million-year-old brain will always want you to run fast, to react quickly, to chase and fight and freeze. But you're not in the savannah anymore. You're in the market. And the market rewards the opposite of everything your survival brain wants you to do. So take a breath. Trust your system. And remember, you're not fighting against some external enemy. You're not trying to beat other traders or outsmart the institutions. You're just trying to manage the 3 pounds of ancient wiring sitting in your skull. And when you can do that, when you can create enough space between your emotional brain and your trading decisions, that's when everything changes. That's when you stop being a victim of your own neurology. That's when you finally start to win.